welcome back to our detailed analysis of the fine print of what the budget 2012 threw up. We've been getting you a wealth of views and opinions on what the budget means for the economy on the whole, but here are all the top headlines on the show.
It would be my endeavour to restrict the expenditure on central subsidies to under 2% of GDP.
The Finance Minister presents a pragmatic but staid budget today. No brave ideas, but tries to achieve a credibility on the fiscal deficit numbers, promises to cap the subsidies at 2%.
I have made a determined effort to come back to the path of fiscal consolidation in the budget for 2012-13 by begging a fiscal deficit at 5,13,590 crore, which is 5.1% of GDP.
And the fiscal deficit will be brought down to 5.1% from the 5.9% figure in FY12, but the gross market borrowing shoots to 5.69 lakh crores. Bonds crash today.
I also propose to raise the upper limit of the 20% tax slab from 8 lakh to 10 lakh.
But some relief for the common man. Personal tax exemption limit has hiked to 2 lakh rupees, while the Finance Minister tweaks the tax slabs to increase the spending power. We've been getting you constant coverage and views on what the budget means for the economy. Now, the Finance Bill has proposed a clarificatory amendments to Section 2, 9 and 195, whereby overseas transactions involving Indian assets would be taxable in India. Now, the amendments are proposed to be retrospective from the 1st of April 1962, and if passed, this budget will impose a tax burden on not just Vodafone but several such mergers and acquisition transactions. Now, the government and tax experts are quite divided on whether the move is indeed retrospective or not. So let's hear out what R.S. Gujral and Mukesh Bhatani had to say when they spoke to Shireen earlier.
We are clarifying that the legislative intent had always been and is even today that such transactions are subject to tax in India.
Mukesh Bhatani, you want to jump in?
Shireen, I must confess that this is an uneven battle. I have 5 secretaries to Government of India versus a
You've
professional.
got me on your team.
I think it's difficult to digest. That's my first comment. I think there are 2 aspects. One is, if I wear my hat as a professional, I would say that this amendment will result in a lot of uncertainty, because you already have the highest court of law giving its verdict, right or wrong. And the second important aspect which needs to be borne in mind is that under the Constitution you cannot bring out a retrospective amendment to impose a charging provision. Yes, it is correct. You can clarify the intent of law. Let's assume that this is a clarification on the intent of law. The amendments are far-reaching. They have amended Section 195, Section 9, Section 2. I cannot imagine that if the amendments date back to 1st April 1962, that somebody had the wisdom in 1962 to think like a Vodafone transaction could have occurred.
Hold that thought. I'm going to get both Mr. Gujral and Mr. Gopalan to respond to that.
My straight response is that we were very particular in seeing that we don't make substantive amendments, that it is only pertaining to the sections where it is clarificatory that this was the legislative intent. That is it. And as far as Mr. Bhatani is saying that it is difficult to digest, why? It is a transaction where there is payment of no tax. Why should there be a transaction where there is payment of no tax?
Sir, I'm not disputing.
It is an issue that such transactions should be liable to tax.
Sir,
if it were a point that there were double taxation, then yes, I can understand the concern, and there the government should really look into these.
Sir, I can understand the government's and the lawmakers' frustration not being able to tax a transaction like this. And that's the reason the Supreme Court has gone ahead and made a statement that India should have had general anti-avoidance, because if there was a legislated general anti-avoidance, this transaction undoubtedly would have been taxed. The question is, can you read the extant law of 1962 and tax this transaction? That's really the debate.
All right, so this move may have a far-reaching impact on both foreign investment and the Vodafone tax case. But let's cut back across to Shireen, who's now with the top guns of India Inc. trying to decode the budget. Shireen.
All right, thanks very much, Sonia. That's right. We are getting you continuous coverage here from the Confederation of Indian Industry on what India Inc. has seen from this budget, how India Inc. has rated this budget. I've got with me Arun Myra, Nena Lal Kidwai, Sunil Godhwani, Pramod Bhasin, and from Bangalore, Mohan Das Pai. Arun Myra, let me start by asking you, there's been many ways that this budget has been described: pragmatic, timid, disappointing, not enough brave ideas, not enough brave thought, not a budget of far-reaching ideas. Has the government lost an opportunity?
I don't think so. In fact, I was maybe teasing Pramod when he asked me, what do I rate this budget? Scale of 10. I said 10 on 10.
Really? 10 on 10?
Yes. And I'll tell you why. I said, look, we're expecting solutions to a large number of substantial problems, structural problems in the budget. And the budget is not going to be the vehicle to solve those problems. So I want to get past it completely.
Okay.
Let's be done with this.
Okay.
And let's solve the real problems, which will then help improve the financial situation, the attraction for investments, and so on. So we need a set of reforms which are to do with administration, institutions, implementation. It's like from the private sector. Well,
subsidy.
Maybe, yeah. But you have your CFO in your company and he says, gentlemen, there's that much I can do. If you guys don't perform, I can't put figures out.
But
I want to just, go ahead.
No, I just wanted to ask you, are you suggesting then that, because we've been trying to ask the finance minister, the officials of the finance ministry, how are you going to achieve this fiscal deficit number of 5.1%? And I purely go only by one head, and that is what's happening as far as the oil subsidy is concerned. They've calculated it at $115 as opposed to $90 the last time around. They missed their budget estimates of last year by 45,000 crore rupees. They budgeted less this year. They haven't talked about deregulation of diesel. They haven't talked about how they intend to prune that subsidy bill down. Do you believe that they're going to do it outside of the budget?
Well, good point. Now you're talking about, do the numbers add up?
Yeah.
Right? That's a budget problem. Sure. They don't seem to add up on that matter, it seems. But if the finance minister has said that they will add up, every action doesn't get taken in the budget time itself.
Sure.
They could be increasing the prices afterwards. They've indicated that they intend to do it. So there is a political storm around at the moment. Maybe this is not the smartest time to do it.
Okay.
It will be done possibly. In any case, that's still solving just the numbers adding up problem. And I do want to keep saying for a while to us that it's about getting things done. Reforms in the various other areas, administration, like I said, institutions, we better attend to those.
Okay. Nena Lal Kidwai, I want to talk to you because this is what the market is worried about. This is what the economists are worried about, that you've got such a high market borrowing figure. You're going to crowd out private investment. You've got inflation, which continues to be very high, though he's hoping that it will be tempered, it will moderate. You've got the Reserve Bank saying, show me a credible fiscal consolidation map. We don't know whether the Reserve Bank believes these numbers or not. Your own assessment of what we can possibly see happen as far as interest rates are concerned, given what's been clearly articulated now as the government's fiscal consolidation roadmap.
Yeah, I think we should laud the fiscal consolidation number. In itself, the 5.1 is lower and better than what we were all saying yesterday.
Yeah.
Pre-budget, if you asked the general economist panel, some of the panels I was on, the consensus was more around 5.3, 5.4. So we've got here an ambitious number. So the question then comes up, is this a credible number? I think we have to give the finance minister a chance here, and let's look at it. It's not like he hasn't raised taxes.
Yeah.
We widely believed he would raise taxes in terms of excise and service tax, and that has happened. So he has got some amount of revenue generation coming from there. A 2% increase is major. Widening the service tax net is also the right step, and that has happened. So there is a burden on industry therein. On the other hand, he's had a pretty light touch in terms of individual investors. He could have come in there as well and said, look, it's time for consolidation. We want to increase taxes. Everybody has to bear the pain equally, etc. He hasn't done that. He has maintained that there has to be consumption, demand-led growth, and that needs to continue as is and indeed improved, and so some steps there. So I think in this balancing act, the pain point or the worrying one to my mind is expenditure. It is where government fails typically. It is where things can burgeon beyond control, and it is also about where money gets spent badly because it doesn't reach where it should.
Right.
And there's mention there of administrative reform there's mention of Aadhaar, there's mention of using those schemes better.
Yeah.
So yes, we're getting better at it, but are we there yet? No.
So do you see a rate cut from the Reserve Bank in April?
I think April
on the basis of what we've seen.
I think even before this budget, April is too soon.
Okay.
I think the Reserve Bank of India has rightly suggested that liquidity will continue to be increased to help growth. However, inflation is sticky.
Yeah.
And inflation is sticky not because of interest rates alone, but inflation is sticky because we have food supply issues, supply chain issues, energy price issues, things which are not all within government's control in the near term or indeed within government's control at all if it's to do with oil prices globally. So as long as inflation looks sticky, it's hard for us to imagine a situation where interest rates come off. But the RBI has clearly signaled that interest rates will be on the way down. As to when,
the question is
what
when.
we have
Sunil
to see.
Godhwani, this budget has said a lot in terms of capital markets, the rationalization of the STT, the Rajiv Gandhi equity scheme. Markets seem to be okay, I mean, satisfied, good, you've done what you've done, but it's not really a game changer. Do you believe that it changes things for the equity markets, the announcements that have come in today?
You know, the funny thing in this budget was last year when we went to the same budget, there were a lot of expectations. This time the market, I didn't have any expectation from the budget. They felt it's going to be a wait and watch game. There is a political paralysis in the country.
Right.
I mean, really don't expect the finance minister to come in and deliver things on fact that he says something and then there's a rollback happening.
Yeah.
I mean, in his speech, he just very humorously said, I'm going to roll back my speech and talk.
Yeah.
So there are subtle messages, whatever he has conveyed. So I think the market respected the fact that it's realistic. He's not setting a tone of expectation.
Okay.
However, there was a demand to reduce STT actually significantly. So he has done. But it's an intent.
It's not going to make any
difference.
difference.
So he said, listen guys, I've heard you. I agree with you. I can't do it today. There's an intent. I'm giving you something. On the other side, on the retail, the Rajiv Gandhi scheme is trying to get the retail in. I don't know how much it will do because there has to be a feel-good factor. That's the question I want to ask
both of you on the ECB relaxation, because it's come across the board for sectors like aviation, power, etc. Do you see that as being a big kicker?
See, the sectors that have been highlighted are already under stress. So if somebody to give them a borrowing, they really have a strong case there. But at the same time, for those sectors, at least opens an opportunity. So today, if they have a future growth plan which is valid, which is credible, they have an ability to deliver on that, they can go and explain it, they'll be able to draw capital.
So wouldn't really change very much the ECB relaxation that's been announced?
I don't believe so, because you know, these sectors, there will be some in the power sector that are creditworthy, not all are, less so in the civil aviation sector. So ECB borrowings have typically been there for our big creditworthy investors. So I don't think in itself it's a major SOP. I think the SOPs come in infrastructure in different ways. They come from what is an increase in the tax-free bonds, 30,000 to 60,000 crores. As well as the withholding tax. And I think particularly on the bonds, it's attractive because it brings retail investment, which is just sitting under mattresses, going into unproductive investments like gold, out into infrastructure. And it's a good way of galvanizing poor investments or savings into infrastructure. And so that's quite a good positive.
Mohan Spy from Bangalore. Mohan, how would you assess the budget?
Well, Shireen, first of all, I think the numbers in the budget are very dodgy. I heard Arun Maira very clearly, and let me tell you why. The subsidy has gone up from 1.43 lakh crores to 2.16 lakh crores this year, an increase of 51%. And I'm not sure this 2.16 lakh crores reflects the full extent of the liability. I would think some 20 to 30,000 crores will be unpaid this year, will carry forward to next year. And next year, the budget only says the subsidy will be 1.90 lakh crores. And in the food subsidy is almost flat next year compared to this year, when you have the food security bill lurking somewhere there, and they've increased the price for the farmers, and that means the full subsidy will go up, and there is a 55 million tons of food grains in stock, a record high. So in all indications, I think the subsidy for next year will go up by 50,000 crores, even if you increase fuel prices by another 40-50,000 crores. Once again, they underprovided for the subsidies. Secondly, on the revenue side, there's a tax increase, a revenue increase of 19.5%. Out of 19.5%, 45,000 crores comes from tax increases. If you reduce that, is 14.5%. At a time when manufacturing is down, you expect corporate profits are down, you expect profits to go up by about 14.5%. Well, the GDP is expected to go up by 14% as per the budget. So they're estimating that when the GDP goes up 14%, all the revenues will go up 14.5%, which may not happen because, profits are under stress and manufacturing is going at anemic growth of 4.5%. I think the 45,000 crore indirect tax import is unnecessary because that's going to hurt manufacturing mainly, and manufacturing as it is anemic at 4%, even though the finance minister said this quarter we're seeing some growth, I don't know whether the growth will translate into extra revenues. They could easily raise this 45,000 crores of extra revenue by asking the public sector to pay more dividend. You see, this Coal India is carrying a 60,000 crore cash.
Already getting them to do that, Mohan. They're already getting them to do that.
No, they're not, Shireen. If you look at the budget figures, Shireen, they paid a small paltry dividend of 9 rupees. They should be paying some 45-50 rupees of dividend because they got so much of cash. And if you look at dividends are 53,000 crores in fiscal 12, and next year some 53,000 crores. No increase in dividend. No increase in dividend at all. And I think, the numbers just don't match up, and the credibility of the entire financial budget will be in doubt because you're underproviding for subsidies, you're overestimating possibly, tax revenues, and you may not get the tax revenues and other expenditure. Let's say they're estimating some 45,000 crores from 3G auctions next year. We don't know whether it's going to happen, because the matter is still under.
There are a lot of assumptions that the budget has factored in, which may or may not actually be able to deliver. So you're absolutely right in terms of the credibility and the question marks with respect to those numbers. But Pramod Bhasin, I want to talk to you about what they've done as far as bringing in that retrospective amendment to Section 9, Section 165 to tax Vodafone-like transactions. You're in court as well. Genpact is in court as well on a similar matter. How worried are you, and what kind of a signal do you take away from this?
I think the budget has been disappointing for us for a variety of reasons. This is clearly one of them because it increases complexity. It's meant to simplify the tax code, which is already open to so much interpretation, so many lawsuits. It makes doing business in India harder. I mean, that's the facts up till now. And the entire tax and revenue collection process is really quite cumbersome. Now, if you start going retrograde and retrospective in terms of...
Though they're saying it's only a clarification, it's not a retrospective amendment.
I understand, and we have yet to read the fine print. Yeah. So that I will obviously have to give the benefit of the doubt till we do that. But the fact is that when we go back and start issuing clarifications with a clear aim or a perception that there is a clear aim towards certain types of transactions, it's extremely worrying for the country and for corporate India. I think I'd like to add a couple of other things. One, I think the entire area of attacking subsidies hasn't been defined. We've said we'll bring the subsidies down to X percentage point. Well, how is that going to happen? Yeah. I totally agree with Arun on that. One of the largest points, one, our expectations from budgets are often too high. Yeah. And two, we don't seem to be attacking the issues that really matter. Administrative reforms whereby the functioning of government improves, whereby the money we spend goes to the right places, and whereby we have an action plan rather than a statement of intent, which says that this is how we're going to spend the money and this is how we're going to get the benefit. Along with that, I think there are other things that could have been done. I do believe it is a expected but disappointing budget.
Expected but disappointing budget. Just hang in there. Mohan, I want to get you to react to the Vodafone issue and the retrospective amendment that's been brought in. What do you think foreign investors are going to take away? This was a matter that was decided by the Supreme Court in favor of Vodafone. If at all they wanted to bring in an amendment, as was the case that the Supreme Court had said in its very own judgment, could they not have done it prospectively?
I totally agree, Shireen. I agree with the logic that when assets are transferred in India, the government should get a share of taxes. The logic is impeccable. But you don't amend the law from 1962. What you have done by this amendment is betrayed the faith and trust of the Indian people and Indian assessors in the government. If a government can amend a law from 1962, reopen many assessments and say this is what we meant, and they were not there in 1962 when the law was passed. That parliament never had this, and for 50 years you never put this point of view, and now you're putting this point of view and said this is what we meant when we had a law in 1962. It will make us a laughing stock all over the world. But more than that, Shireen, it will give a stick to the income tax department to reopen cases and beat people all over. We are in for a big mess in this country, and I'm very worried at the fact.
They're hoping to mop up 35 to 40,000 crore rupees by way of that. Pramod, very quickly.
That's the problem. I mean, you know, right now the revenue collection efforts are so intense across the country that you're trying to make up for a deficit in the budget that in a manner which really will harm corporate India. I think Mohandas Pai's point on what it does to international investors is extremely vital. The whole world is watching this. The Supreme Court pronounced something, and now we're trying to find ways to perhaps change that around. If it's only a clarification, terrific.
It is a retrospective amendment. But Arun Myra, you're hearing what industry has to say. You're sitting at the Planning Commission at this point in time. Forget FDI and multi-brand retail, those are not game changers. But just in terms of faster approvals, in terms of getting projects off the ground, you know, he talked about coordinated policy action, but, you know, we've seen the Prime Minister's office stepping in to restart the power sector. Is it now really going to come down to the Prime Minister's office having to intervene to get things off the ground?
It shouldn't have to, and that's why we need substantial reforms in how decisions are taken, how organizations are being run in government, and government working with the private sector. And by the way, the Administrative Reforms Commission, the second Administrative Reforms Commission, has produced some excellent recommendations over the last few years. 15 reports. They've studied the problem, they've taken foreign advice, they've consulted people in the country. What we should be pushing all of us is get those things done, get those reforms done, and you'll find most of these problems solved. Okay? They're very impressive, those reforms. They're talking about up and out for the IAS also, that before you come to the last stage, the last 5 years, you will be judged by a 360-degree appraisal. If you don't cut it out, and you'll get private sector people also through a selection process. Very substantial changes being proposed. So that's why I'm pushing very hard to say, let's get beyond the budget, let's make those things happen.
Okay, Nena, what would you like now to see happen? I mean, the budget is done and dusted, it's over and done with. There will continue to be question marks as far as the budget math is concerned. But outside of this now, in terms of reforms, if they are to happen outside of the budget, what do you think they're going to have to do as a priority?
I would like to see a lot more on infrastructure, because I think kickstarting construction and growth through infrastructure spend is an age-old story. Countries like China have done it very effectively. We need it, and let's just get it going. It's the first year of the new plan. There's no reason to hold back. There's been a small increase projected in the budget for roads, but we really want to see big bang infrastructure growth. So a lot more there. I think clearing up all the issues in the power sector are key. I know that the PMO's office has been engaged in this over the last month, but we do need the interministerial cleanup. It's good that imported coal is now down in terms of a zero duty, but we need a lot more than that in terms of coal linkages and supply for the power sector. So if we can resolve infrastructure and power, that would be a big one. And the third, which frankly many of us have been shouting from a roof, so I don't know where it gets us, but the whole food supply chain, everything to do with the cold chain supply, to enable logistics. I mean, there's still 3 states in the country that have octroi. So, you know, what do you have to say about that? It's not a central issue, but our states themselves have to now deliver up to let's have a proper food chain, supply chain system.
Final words with you, Mr. Myra, because, you know, they can talk about what they want to do. The question is, what are they going to be allowed to do? Mamata Banerjee doesn't even allow a passenger fare hike to happen. We don't know what the state of affairs is as far as the railway budget is concerned, or the railway minister is concerned. Are you feeling confident that all of these reforms that we're talking about are really going to go through at this point in time?
You know, which reforms? If you say FDI and retail, it won't go through. But as Naina said, in the power sector, the coal, the linkages, the clearance of projects, this is execution. I mean, the policy is there. If we were not to even ask for any new policy and perhaps even no new money, just get these things done. And we've got an agenda to get these things done. and this is what we should apply ourselves to, then we won't have to take the Prime Minister's time to intervene.
Okay, we won't have to take the Prime Minister's time to intervene. Arun Maira, Pramod Bhasin, Nana Alkidba and Sunil Godhwani, appreciate you joining us here on CNBC TV18. We'll take a quick break, but when we return, the man of the moment, the Finance Minister, in conversation with Raghav Behel.